This is a very important dollar update ahead of the key FOMC rate decision next week. This one is absolutely massive. Let's break everything down. Morning, baby. Happy Friday. I hope we are all well and truly lit. Yes, we are back with another day in these beautiful markets. Guys, let's just jump straight into this rundown because obviously we had some questions. Rightly so. We had some questions coming through in the community asking, essentially the data. When we look at the data this week, which obviously a lot of focus has been on those CPIs and PPI data, right, this week, where we observed still sticky inflation in the United States, right? The core CPI remaining sticky there on a month-to-month basis at 0.3%, on a year-on-year still elevated, right? It's coming down, but probably not as fast as it needs to in order to warrant aggressive and regular action from the FOMC. Because remember, when we start cutting borrowing costs, we start cutting rates, we're going to be lowering people's costs. And that's an inflationary risk. Okay, remember that. Don't forget. So when you look at this CPI data as a whole, really, it's still risks. There's still risks of inflation not falling as fast and could be still a bit of a spiky road towards the FOMC's target. Okay, they want inflation down around 2%. And then when we look at PPIs here as well, okay, this is a little bit mixed because in that latest reading, we had elevated on a month-to-month there, 0.3% on the core, 0.2% on the broader figure. But then when you look at the previous numbers, they were revised lower. Okay, they were revised lower. So I guess this report here with producers' prices is a little bit mixed, okay, because there's signs of inflation cooling there with the previous readings revised lower, as you can see there on Forex Factory. That was revised from 0 to minus 0.2. This was revised from 0.1 to 0. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why has the price just spiked here because of this fundamental reason? I don't understand it. Because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Unemployment claims still relatively healthy. They're not really aggressively spiking higher in terms of the amount of unemployment claims, which is also still inflationary. Okay, so I'm still just focusing on dollar at the moment. We'll talk about euro and peers in a moment because obviously we had the ECB rate decision. Now, why did the dollar come under some pressure yesterday? And it was, look, I'm just sort of lost for words, but now, there are reports coming out of both the Financial Times and the Wall Street Journal, okay? And these reports suggest that this is still a close call for how the FOMC cuts rates, whether they cut by 25 or 50 basis points. So it's still a close call as to whether they could go with a chunky rate cut and go at 50 basis points. So the report suggests that there's uncertainty among Fed officials on whether to implement a 25 basis point or a 50 cut, while the majority lean towards a 25 basis point cut. The potential for a 50 basis point cut has not been ruled out, okay? Especially given mixed economic data and labor market concerns. So, that's according to reports, just through potential insiders, if you like. Someone might have discreetly spoke to someone and then they get their hands on the inside commentary. So it's close. It's going to be a close call. It suggests these reports. So that's why now, if you look at the CME watch tool, we've jumped up to the probability of a potential rate cut of 50 basis points to 43%. Yeah. A day earlier, right? Remember after those CPI figures, where it showed generally inflation still somewhat sticky, not cooling as fast as it could be. The probability dropped down to 14%, and 86% probability of that 100% price in 25 basis point cut. So now the probability has risen because it's suggested that this could be a close call. They could cut by 50 basis points. So that's why the dollar came under pressure there. Now, stay with me. This is really important because I'm going to say something that's very, very important that not everyone is going to be thinking about. So if you look here, obviously, when we look at a moment, there are still some vulnerabilities for the dollar. We had said that before. There's still a little bit of vulnerabilities here. Obviously, when we looked at the monthly, we had this big bearish candlestick there in August, and obviously some selling so far in September. Okay. And when you look here on the daily, obviously the structure's clearly to the south, right? It's a southbound trend right now with the lower highs and lower lows. Look, nice little flag breakout, pennant breakout. And then we've got this wedge and we're having a little bit of breakout at the moment, potentially one leg lower, potentially one last leg lower. I did say how, this could be the last, we're in this period of the last final sell-off for the dollar. Now, listen to this. If the FOMC, I cannot stress this enough, guys, right? I could get this wrong, but I have a lot of conviction behind this view. If the FOMC comes out and cuts by 50 basis points next Wednesday, the markets are fucked. The markets are fucked. Why, Ken? Why are you so vulgar and explicit when you say that? I say that because this is going to lead me onto all the content that I'm about to produce to you guys. And I don't know whether it's going to be ready ahead of next Wednesday. Okay, but the moves may not be as fast as that. If the FOMC cuts by 50 basis points, the markets are fucked. Why? They're fucked because the FOMC potentially sees something. You got to remember these guys, these guys keep a lot of information. They gatekeep a lot of information to the everyday person, to the markets, because they don't want to, if they spoke about everything that they forecasted, I think there could be a lot more problems. So they're trying to conduct damage control. Do you understand? They're trying to conduct damage control by slowly, trying to slowly gear the markets up for this bust that we're heading towards, this economic bust. All right. So if they're wanting to cut by 50 basis points, that's trouble because they see, the economy slowing down and even the broader economy, the global economy, potentially heading in a direction where we need to start acting now. We can't risk only cutting potentially by 25 basis points because what if we, this downside spiral, this new economic cycle that we're heading towards happens now? What if it happens now? So, I think 50 basis points cut, maybe stocks rally initially. We get excited. We're like, yeah, we're cut by 50 basis points. Our costs for businesses as a business have gone down. Costs for consumers have gone down. But then when people stop being so fucking narrow-minded and start opening their eyes to the broader picture of things, they're like, shit, these guys have just cut by 50 basis points. Are we heading towards an economic downturn? And then we have to listen as well. If they do cut by 50, we have to listen to what the FOMC say. Do they see vulnerabilities in the economy? Do they see downside risks to the United States economy and maybe even the broader economy? We have to really, at this meeting's one of the biggest. No, excuse me. It's the biggest of 2024. The biggest. Okay? So we have to listen to what they say as well, that rhetoric with the decision. This is massive. Anyway, why I say the markets are fucked as well, because obviously if they do cut by 50 basis points and the market starts to come to realization, they have a wake-up call, it's slapped in the face, then, and they come to the realization that we're heading towards an economic downturn and the bust, then obviously everything starts selling off, right? And then dollar rallies. This is what I mean. We're potentially in this final period. Either way, we're in this final period now of dollar selling. This is the final period. This is it. Okay. So next Wednesday or beyond next Wednesday, once we've got a clearer picture of how the FOMC thinks, what their actions are, things could start shaping up, okay, for this economic bust, this economic downturn. All right. So either way, if we trade in what we see right now, the dollar still remains vulnerable. Okay, dollar still remains vulnerable right now, and we're unlikely to get full commitment with any direction until next Wednesday. Okay. All All right, let's carry on. So that's done, guys. So guys, as always, I hope you found value in today's video, the little snippet taken from our TFTC Premium Community Rundown. Obviously, we always dive into things in a lot more greater detail in the broader markets and obviously look at actionable trade ideas with all this macro knowledge. If you do want to level up, you can check that out. And you can also check out the Fundamental Bootcamp. I've got a ton of content that's coming out soon, okay? So stay glued to my socials. Obviously here via YouTube, I'll be announcing it shortly, and also via my X or on Instagram. Either way, it's all going to be noted. We've got some exciting content coming ahead of that economic cycle, which I'm so passionate about, that we're entering that new phase of this economic cycle, excuse me, the bust. So a lot of education and content coming around that, so you can check that out. But otherwise, as I always say, I've got a lot more knowledge to share, especially during this period. I want you to smash up the subscribe button. I want you to hit that like button for me. And I do want you to drop a comment if you are finding value in this content as usual. Stay lit, stay blessed, and let's get it.